A simple tool for trading FOMC. Hi, this is Charlie Burton from EzeeTrader. I hope you're very well. It's FOMC tonight, so I thought as a little treat, I'm sure I've done this before, I'm going to show you a simple little setup if you want to day trade FOMC and for this evening. So the simplicity of it is that you do it on the Dow or the S&P, and what you do is you take your chart down to really a 2 minute chart, most likely. You could probably get away with a 5 minute chart. And so what you actually do, if I bring up the pen, is at 7 p.m. UK time. So as the announcement comes out, this is on the announcement at the top of the hour, not on the press conference. This is on the initial announcement. What you're looking, and I used to trade this for years. I don't trade this anymore because I don't really trade the S&P much on FOMC. I trade currencies if I'm going to be trading on FOMC. But what you're looking for is an initial move. So you don't have to do anything when the announcement first comes. So what you are looking for is an initial move. And if the initial move comes to the upside, what you're then doing is you're looking for a pullback for a resumption of that initial move. So whichever way it breaks initially, then you're looking for, then you're looking for a retracement to then get long, basically, if it goes up. So here's there's three waves here, basically. And you can't try and stay in it forever. You've got to, just be in it, manage it quickly, and move on, sort of thing. But don't get me wrong, this could take up to 15 minutes or so to play out. So it could take, I guess, 15 minutes or 20 minutes to play out. But I haven't looked at it recently, so you're going to need to go back and have a look at it. Best bet is to go back, scroll your charts back, put it on a 5 minute chart, scroll it back to the previous FOMCs, and look and see what happened. So if it breaks to the upside, that's what you do. If the initial move is to the downside, then it's the opposite. So you've got 1, 2, 3, and you're then looking for the retracement to then get a short in. Okay. Now that all looks very clean and beautiful and lovely, but I now need to just add some extra caveats to this, because that's just the simplicity of it. But what can happen is it can have an initial move, then come down below the low of where it started, and then still go up. So that can be a bit messy, because then where do you put your stop loss? But you have to decide. You have to put your stop loss somewhere. So it could be if it does something like that, then you just get stopped out. But that's the type of thing that can happen. Be also wary of a fake move initially. So what you can also have, oops, wrong pen. So what you can also have is a situation where it sort of jumps like right around 7 o'clock, maybe just in the last minute or few 10 seconds or so beforehand. You think, oh, it's going to the upside, and then it shoots down. So what you do then is you ignore that first move there. That is not the first move. This is the first move, and then you're looking for the retrace and then the move down. So it's not always completely clean, so to speak. So sometimes, if you get a move just before 7 o'clock, and just be careful that might just be some positioning. The real move is this. So the easy way to do it is to sort of wait for the first few minutes, and so let it have that leg for the first few minutes or so. So you can say, oh, okay, right, it definitely looks like it's going down. If that's the case, right, when it does a retrace, then I'll look to short. So I don't have anything on when you short or when on a retrace, what exact point. You have to use your own trading skills to do that, as same with stop losses and targets as well, because it's not going to carry on going down forever necessarily. You've got to look at the support and resistance that's on your chart as well. But it's a nice little pattern. It's been there around for years. I used to trade it years ago when we used to trade FOMC on the S&P. But I haven't traded it in recent years, but I know that there's still people out there who do trade this pattern. So I thought I'd share that one with you today. Outside of that, there's a lot of talk about gold and silver at the moment. I took a call from a chap who cut our trees down recently, a tree surgeon, and that sounds bad. Cut our trees down. He didn't cut our trees down. He trimmed the branches. Sorry, I'm not cutting trees down. We did not do that. Anyway, he trimmed our trees recently. Anyway, he called me. Fun enough on Sunday, asking, oh, should I buy silver? So if I go to chart of silver, actually, should I buy? Charlie, I was in the pub on Saturday night, and this was Sunday, so this was that's Tuesday, so it was actually here. So, and he was obviously he wouldn't have seen a chart. He was saying, oh, a friend of mine's told me I should be buying silver, and he's been buying loads of silver and stuff. And I'm like, well, that's fine, but just beware that, no disrespect to you, but when you and your mate are in the bar talking about buying commodities, then that gives me concern. Because if the wider public start wanting to get involved in things like gold and silver, it can often mean that we're getting close to a near-term high. And actually, if you look at go back to the chart of gold, and you look at where gold is, well, that wouldn't be surprising now, would it? Considering it's broken the highs of 2011, and so at some point it probably will be. It could well be very, very soon due a retracement. It's had quite a run here if you look at this monthly chart here. So I think at the moment gold, of course, when you've got a strong momentum move, and it's no different when we had the move in Bitcoin in late 2017, and it just went up and up and up, and we knew it was getting really frothy, and that it was in a topping period, because when markets start going stratospheric like that, then there's only so much further they can go. But at the same time, day after day, it can go and do another $1,000 or $2,000, like in Bitcoin at that time. And it's the same with gold at the moment. It's not to say that gold couldn't keep having another run yet. It's got close to $2,000 an ounce. Maybe it wants to go for that. But certainly, I'm having some concerns because of the amount of chat that's out there about the precious metals. But don't get me wrong. I'm long gold with some of our swing traders. We've been long from way back here, so we've had a tremendous run. But we're just trading our stops up aggressively now. So because I'm sure that at some point it will do probably an aggressive down move, a bit like it started doing yesterday, intraday yesterday, and same with silver yesterday. They had a spike up and a spike down, closed somewhere in the middle. So that's gold. So do watch out for that. I know it's very tempting at the moment. If anyone was interested in gold, you're better off waiting for the froth to come out of that market. So at some point it will peak, rather than trying to chase it now through fear of missing out. You just got to accept that if you want to be in gold, you're probably too late. You'd be chasing a market which has already had a tremendous run. If you go back to that monthly chart, it really puts it into perspective. Do you really want to be chasing that? What you're better off doing is creating a trading plan around trading gold and saying, okay, I've missed that run, and also it's getting frothy, so what am I better off doing is waiting for it to quieten down. And what it needs to do is retrace and then go a bit boring for a while, quieten down. So reality is you want to be buying this the end of the year. Not now necessarily. I know it could be famous last words if it goes up another few $100s, but from a plan perspective, what you really want is gold to sell off a bit. This is a monthly chart, so probably over a couple of months, 2 or 3 months, and for it to quieten down. So the chat quietens down, and it's during that quieter period that then you can then start looking to buy, if that is your plan, that you wanted to buy a precious metal like gold and you believed it's going higher, then that's how I would look at that. Right, I'm going to leave that with you. Enjoy FOMC tonight for those of you that are trading that, and I'll be back on Friday for live trading. Ciao for now.